How to become rich during a stock market crash. Everyone fears a stock market crash, but what if I told you it's the perfect time to get rich? Forget the panic, because smart investors know crashes are when opportunities explode. Let's turn market fear into your financial freedom. Market crashes aren't about the end of the world, they're about temporary price drops. Solid companies get caught in the storm, offering you a chance to buy them at bargain prices. Think of it as a massive clearance sale on your future wealth. When the market rebounds, these undervalued stocks can skyrocket. This isn't gambling, it's strategic investing. The key is to be prepared and know what to do when the inevitable downturn arrives. 1. Target quality stocks on sale. Focus on companies with strong financials and proven track records. When their prices plummet, it's time to pounce. Think of companies like Apple, Microsoft, or Google. Example: during the 2008 financial crisis, many blue-chip stocks were trading at incredibly low valuations. Investors who bought then reaped massive rewards as the market recovered. Dollar cost averaging is your friend. Don't try to time the bottom. It's impossible. Instead, invest a fixed amount regularly, regardless of market conditions. This strategy helps you buy more shares when prices are low. Example: if you consistently invested $200 per month into an S&P 500 index fund, you'd accumulate more shares during a downturn, setting you up for bigger gains later. Embrace index funds for broad exposure. If individual stock picking isn't your thing, index funds like the S&P 500 SPY are a great option. They offer instant diversification and historically strong long-term returns. Example: the S&P 500 has consistently rebounded after every major market crash in history, making it a reliable choice for long-term investors. Consider leveraged bull ETFs carefully. For aggressive investors, leveraged ETFs offer the chance to amplify returns by 2x or even 3x the performance of an index. These are designed for short-term trading and can lead to significant gains if timed well during recovery periods. Example: after the March 2020 crash, the 3x leveraged S&P 500 ETF, SPXL, jumped from around $25 to over $100 by late 2024. A $5,000 investment would have turned into more than $20,000, quadrupling your money. However, leveraged ETFs also magnify losses, so they require close monitoring and high risk tolerance. Key takeaway: the most important tool during a crash isn't money, it's your mindset. Stay calm, avoid emotional decisions, and focus on the long term. Remember, fear is your enemy, and patience is your ally. Don't get caught up in the headlines or the panic selling. Instead, use the opportunity to build a solid portfolio of undervalued assets. This is how fortunes are made. This isn't just theory. It's a proven strategy that has worked for countless investors throughout history. The key is to be prepared, stay disciplined, and think long-term. Don't wait for the next crash to start planning. Now is the time to research quality stocks, understand dollar cost averaging, and consider your risk tolerance. Knowledge is power, and preparation is key. Real-life success story: Warren Buffett in 2008. One of the most iconic examples of building wealth during a crash is Warren Buffett during the 2008 financial crisis. While panic spread across Wall Street, Buffett invested billions into top companies like Goldman Sachs and Bank of America. In 2008, he made a $5 billion investment in Goldman Sachs by purchasing preferred shares with a 10% annual dividend and stock warrants. As the market recovered, Buffett walked away with billions in profits, earning both returns on dividends and gains from stock appreciation. His strategy was simple: buy great companies at a discount, negotiate strong terms, and wait. Buffett didn't try to time the bottom. He just acted when prices made sense and fear was high. That's how the world's most famous investor turned a crisis into a fortune. Take action today. Subscribe to this channel for more investment strategies. Leave a comment below sharing your biggest fear about market crashes. Let's conquer those fears together and build a brighter financial future.